What's going on, guys? It's GBP baby. Welcome to another video. Today I'm just going to go through dollar just because I wanted to look back at the week and really look into why dollar turned. Yeah, I'm learning just as much as you guys, and you guys are learning just as much as me, so I thought I'd take you with me just to do some more in-depth analysis. So what I'm going to do is I'm going to mark out all the PD arrays and show you what price traded to and used in order to navigate this week. Now, I really liked the week. It delivered beautifully. So yeah, I'm just going to go into more in-depth analysis to try and show you and help you see what I'm seeing. The premium PD array that we traded to last week, remember we always have a premium and a discount. The premium PD array we traded to is the high, and you can see we made that inside of a bearish order block. So we can write out weekly bearish order block, and we'll make this blue. And that was our premium PD array that got traded to. Now, what was the discount PD array? Well, wicks, we need to understand, can also be split into quarters because we should treat them like fair value gaps. So if you get your Fibonacci up and look at the 25% level, you'll see how price created the low at the 25% level of this wick. So we treat wicks like fair value gaps, we split into quarters and find out how price is respecting or disrespecting these levels. Now, what you'll find with price is that the 25% level and 50% level generally seem to be the most useful, because when price gets to the 75% level, it's usually then likely it's just going to run to the low or to the the top level. If you study that, you'll see it in price, but for now, let's just mark out the 25% level of this wick. So now we know that price used this 25% level as the discount PD array, and then used this as the target for price. And as we drop down to the low time frames, you start to see where the liquidity is residing, that price is then drawing into. So now we're on the daily, and you can see how we delivered up Monday right through to Thursday, and then traded lower on the Friday. Now, this is a classic week, as in creating the low on Monday or Tuesday, in this case Monday, and then trading higher and creating the high on Thursday and then trading lower. What's interesting is that the weekly bearish order block also lines up with a daily bearish order block. These three up close candles are a bearish order block, so it's like adding to our confluence. Now we have a weekly bearish order block layered with a daily bearish order block, which will, in a sense, give it more strength. Another thing I want to talk about is this implied fair value gap. Now, if you watch my videos this week, you'll remember me calling this out. If we are to trade on higher and we are to go to the next level of premium, it would be this implied fair value gap up here. Being able to identify these is quite difficult because it takes time to understand what a fair value gap is. Now, don't get me wrong, this from this low to this high is a fair value gap. However, this is implied because it's not a direct fair value gap. But if we drop down to lower time frames, you'll find that there's fair value there, or there's an imbalance in price. And another thing I want to bring our attention to is the midpoint of that, because what you can find is that price traded to that and then keyed off of it, and look how aggressively we then traded on lower. So we're getting rejection from this daily implied fair value gap just as we expected. We're then able, as price is trading into this, see this and use it as confluence to then expect some kind of move. But that's how I'm looking at price. Beautiful week. Let's see what the 4 hour is saying. So the 4 hour as well, you can see how we constantly used bullish order blocks to send price higher until we eventually broke lower. And you can see that this move from this low to this high, what is it? It's high resistance. Price is struggling to get up there. Whereas this move from this high to, in the move that we're currently in, it's very smooth, it's very easy, and it's moving quite quickly. So what does that say about price's, behavior right now? It's bearish, right? Now, I'm not saying this as in a forecasting way, as in I'm saying, oh, we're bearish. I'm saying this as, look at what I'm looking at in order to understand. Like, you have to treat it like a person, like how is it behaving, and based off that will like sway you in the right way, and you kind of sense it or you feel it. It sounds creepy, but anyway, let's look at these bullish order blocks. So you can see how price used this to trade on higher. You can see how price used this to trade on higher, and then you can see this was the last bullish order block before the break lower. But these are all points of buying midweek, like intraday, that could have been used to make profit. Now, I'm not saying it's easy because I'm still here learning as well, but being able to identify them is going to help us learn, right? So we are going to drop down to low time frames, and we're going to look at how price came down into these levels, and I'm also going to get the daily dividers. But before we do that, let's look at liquidity. Where is liquidity residing on this way up? We have highs here, that's buy side liquidity, but that wasn't enough for price. It wanted to go for this level as well. And then you can see short-term liquidity or short-term highs all the way up here. So here, these are all getting sliced through just to get to this. But as we drop down to low time frames, we can get a better look. But there is also one more thing. Why did we get this big, drastic move lower? Well, we had this swing low over here. Now don't worry about time right now. I know I'm moving outside of the skirts of, you know, last week specifically. You need to look at these PD arrays on the lower time frames to understand how price is getting there. So we'll drag this out and we have sell side liquidity, and that's why we've got such a big movement outwards and we're finding support. Like look at the volume of the candles. Forget the wicks for now. Look at the volume. Respect, respect, respect until we reach our target. And let's drop down to the hourly with the daily dividers. So here we are on the hourly. This red line is that swing low from over here, and then this level is that 25% level of the weekly consequent encroachment. This is the week we're studying, and there's two things I want to bring our attention to first. Firstly, the bullish order blocks from the daily. Remember, I marked these out, and you can see our price is using that to send price higher, and then the same happens here, creating the low there before trading on higher. What I'm going to show you now is something we call original consolidation. So the original consolidation is the point where we left, where price left. So here is the point of original consolidation. Why? Because this is the last place that price left to then get to its next level. Where else can we see original consolidation? Well, we can see it on the south side of the curve, up here. So price left this level to get down to this point. So now we have 2 points of consolidation. And in a recent video by ICT, not a recent one, but one of his mentorship videos that he posted this year or last year, he explains that price will do this basically, and we can see it happening in this week's price action. So it'll create a consolidation, it will leave the consolidation to create a low, and then it will target that same consolidation's highs. So price will then go for that, and that's what we can see happening this week. We have an original consolidation, price has left it and then traded on higher to target exactly that, where we then turn around. So being able to identify things like this is really important, and it does help with trading as well, because if we look at the original consolidation, you can see there's an entry opportunity right here. Now bear in mind, this is an hourly chart, but a short in position here with a stop loss above here with the expectation to run for these lows would have been a beautiful trade. Same here with consolidation. When price returns to the original consolidation, that is a buying opportunity, and you can see it's also coupled with a daily bullish order block. Although I can explain this, I still am learning to do it. It's obviously easier said than done, but if we keep studying it like this, there's no reason we shouldn't be able to enter at the original consolidation with all the biases and confluences that we'll have where we expect price to draw to. Once we hit this buy side liquidity here, what happens after that? We have a run on stops. This is classic for price action. Every time we have a swing high taken out, there should be some kind of run on stops. So we eventually take out this swing high on Wednesday, and then what happens the following day? We create the low below this swing low. So this is the run on stops after a run on liquidity. Hope that all makes sense. We are going to drop to the 15-minute just to get a closer look, and you can get a better look at how price is using these daily bullish order blocks. I am going to make them more visible. So as you can see, price comes down into the bullish order block and gets a reaction. Same thing happens on Tuesday, and then moving into Wednesday, we see the same thing. We come down to a bullish order block, and then what happens? Price expands higher. So it's really simple profiles in terms of how price is working its way up. So you can see how it's biting at the highs. Look at how price stabs through each daily high to get to the next level. So you can see how Tuesday took out Monday's high, and then you can see how Wednesday took out Tuesday's high, and then you can see how Thursday took out Friday's high. No, sorry, Thursday took out Wednesday's high. And then once it creates that high, we have a reversal, and Friday doesn't even attempt to get up there and is running straight down for what? Some kind of sell side liquidity or to fill an imbalance. In this case, we filled an imbalance. So yeah, very interesting week. I think it delivered absolutely gorgeously. This is definitely a week to study. As you can see, original consolidations, run on stops, each daily high getting taken out, low create on the Monday, high create on the Thursday. This is all classic profiling for a week, and I think once you understand this, you can definitely apply it to lower time frames and, you know, use it to your advantage. If you enjoyed this video and you found it insightful, make sure to join the mailing list, as I plan to have lots more content similar to this coming very soon. Thanks so much for watching, and I'll catch you in the next one. Peace.